What is going on YouTube? Today we're going to be looking at Celestia, which is the world's first modular blockchain currently trading around $9 US. We're going to be seeing if this token could reach $250 per coin by doing a deep dive into the tokenomics, the fundraising, the value proposition, the technology, how you can stake it to earn even more yield, and if this price prediction is even possible. So please follow this channel for more data-driven analysis just like this, and let's dive in. And so to get this started, we're just going to do a broad overview on the Celestia market. Ultimately, this token is currently trading at about $9 US, and we think it can go all the way up to $250. So let's back that viewpoint up. The first thing we're going to do is we're going to hop over to CoinGecko, where we see it is currently trading with a market cap of 1.3 billion, and it is accessible on most major exchanges: Binance, KuCoin, BitGet, Kraken, Coinbase, Bybit, Mixi, BitGet, the list goes on and on. This is a highly accessible project. Part of the reason why it is highly accessible is because of the fundraising, but we can talk about that later. The other thing that I'd really like to mention with Celestia is that this token only came out towards the end of October. It is very new. It released with an airdrop where they gave around over $300 million worth of tokens to their community. The qualification period was back in 2021, but they did this airdrop in October 2023. That was a very top-down overview of what Celestia is and how you can access it. Now we're going to be talking about the technology, the value capture mechanism for the token, what interoperability actually means, how this project was developed, and much more importantly, what the entire Celestia ecosystem looks like. Although this token has been displaying crazy pumpamentals, we have to get an understanding for the fundamentals to properly predict if the token could go all the way to $250. It is the first modular blockchain network, which is a bunch of fancy words saying it segregates different layers of data processing. This allows users to deploy their own blockchain fast. It scales well with both the users and the number of blockchains. It is highly customizable, and it allows users to buy TIA to access the technology. That is a very clear value capture, which is what you want to see in a token. The easiest way to understand this technology is with this graph right here. There's a consensus and data layer on the bottom with different layers of execution layer before everything is rolled up into smart contracts. Quick interruption before we get to the regularly scheduled programming. There is live streams about 5 days a week where we do live market analysis, high leverage trading, and talk about different opportunities in the market. I'd love to see you there, and if you want to get notified when these streams are happening, be sure to join our Discord because we send notifications every time. Anyways, let's get back to it. Talking more about the technology, it separates the consensus and execution layers of this technology. Although this has a whole bunch of fancy words, I'll break it down. The data availability proofs are basically a different form of zero knowledge proof or ZK proofs. There's rollups for off-chain execution, meaning the information is confirmed outside and brought into the main chain to help reduce congestion. And there is a very helpful graph at the bottom here. So early crypto ecosystem, each DApp had its own blockchain and consensus. So if we're looking at Bitcoin, that is essentially a decentralized application. Litecoin, decentralized application. The developing crypto ecosystem dApps share different smart contract blockchains. So for example, Ethereum has an ecosystem of entirely different decentralized applications. Same with Cardano or Near or Solana. These are the cryptos shown in the middle here. While the new cryptos that are coming out, each decentralized application is run on a specific chain. They share a consensus layer, but when it comes to efficiency, you can't really beat this. Part of the reason why Celestia has been doing really well right out the gate is because it was built on the Cosmos SDK. If you haven't heard of that, it is a software developer kit provided by the Cosmos team that is ubiquitous across the entire industry. When you see a project built with the Cosmos SDK, you can expect a very high degree of interoperability and a large ecosystem from day one because this software developer kit is used by all of the major blockchains. There is a network map. These are all the projects in the Celestia ecosystem. This was last updated on the 7th month of 2023, and it has grown significantly since then. I would like to point out that Kepler is the most common wallet for self-custodying your Celestia, but we will touch on that later when we talk about staking your Celestia for over 20% returns. Now onto the meat and the potatoes that you actually care about. The Celestia documentation is very well defined. Looking at the inflation rate, it is higher than you would want it. It starts at 8% annually, and that gets reduced by 10% every year until a long-term inflation target of 1.5% is obtained. Graph here to help visualize that exponential decrease in the inflation rate. There's a lot of information here on governance, the amount of TIA distributed at Genesis, and there is some fundraising information as well as token vesting that we will talk about more in depth. Now that we talked about the much more boring fundamentals, let's talk about the much more exciting pumpamentals. Who was involved with fundraising? How much did they allocate? What do the tokenomics look like? Is staking possible? And how you can self-custody this token yourself. So there's a really good resource that I'm going to be using here called Drops Tab. Dropstab.com provides insight into fundraising and tokenomics, and so we can see that early investors, Delphi Digital, one of the largest venture capital firms, Polychain Capital was a lead investor, Coinbase Ventures, Bain Capital, another lead investor, Jump, as well as Binance Labs. Anytime I see Binance or Coinbase, I find that I'm much more confident in the project, because if they're investing in the project earlier, they're probably going to be very interested in listing that project on the exchange. And if it gets listed on an exchange like Binance or Coinbase right away, that is obviously going to reduce the amount of friction that the user encounters to buy the project. Less friction, more pumpamentals, that is the relationship that I see. So Drops tab shows us all about the early stage investors, which in my opinion are all green lights. And then when we look at token vesting, you can get a better understanding for when the next unlocks are. Realistically, it seems like the next unlocks start 334 days from now, which is when we should be in the midst of a really big bull market. And it'll mostly be going to the Series A and B rounds as well as the seed rounds. What I like about Celestia is they did the airdrop, which highly engages their community. It adds a lot of liquidity into the ecosystem, and it rewards early users. Ultimately, kind of all green lights from the fundraising, the tokenomics, and the airdrop perspective. The last thing I'd like to touch on before we get to this price prediction is Celestia staking. On the Kepler wallet dashboard, you can currently stake it for 17.57%. I have seen this number higher than 20% recently, and ultimately the way this process works is that you will delegate your Celestia to a validator. It will be held in a self-custody manner where you can accrue your rewards for supporting the network. Given that the inflation rate is pretty high, I think it is a no-brainer to support the network, stake your Celestia. It will make the spot market more liquid, which is very bullish for the price, as well as if you don't stake, you're kind of falling further behind, because if this token is going to do absolute numbers in the bull market, you might as well try and get that 10, 15, or 20% more to your holdings to further increase your upside. Lastly, the part that you have probably been waiting for, the price prediction. Lastly, we're going to do some math. So let's say Celestia is currently trading at $9 US and we have a price target of 250. So what we're going to do is we're going to take 250, we're going to divide it by 9, and that gives us a number of 27.7x the current price. We're going to take a look at market cap, which is 1.292 billion. We'll round that to 1.3 billion. Guys, this is back of the napkin math. So we're going to do 27.7 times 1.3, which is going to give us a price target in billions of $36 billion for the market cap for Celestia at $250 per coin. But do we actually think that's realistic? As always, with market cap comparisons, you have to get an understanding of if technology A and technology B are comparable. In my mind, I think Celestia could be this bull run's Solana. So when we look at Solana on CoinGecko and we look at market cap, we can see that Solana reached a peak market cap of $80 billion during this most recent bull run. $80 billion. And so our price target for Celestia reaching 36 billion doesn't seem that far-fetched. Lastly, I came to the conclusion that BNB is kind of sitting right at the market cap level that we see Celestia at. So I use this market cap of website. We're going to type in TIA on the left, TIA on the left. We're going to type in BNB on the right, because BNB is a market cap just over 35 billion, and TIA with the market cap of BNB is a 27x, and TIA trading at $240. So personally, it seems realistic. Thank you for watching. I truly appreciate it. Please subscribe to the channel, like the video, join the Discord community, come check us out on Twitter, do all the buttons. because at the end of the day, I am doing this to help you guys learn about this new technology, capitalize on this opportunity, and my simple request is that you show some support. Thank you for watching. Let me know what your price target for Celestia is, and take care.